The stock market continues to push higher with the third straight weekly gain, reaching another all-time high. The Strait of Hormuz is starting to get some complications with Middle Eastern tensions escalating, driving oil prices higher. Are we going to see another major leg higher, or are we going to finally get that pullback?
Welcome back to StockWatch. This week was all about record highs, inflation, the Federal Reserve, and growing geopolitical risks. The S&P 500 pushed into another record close as cooler inflation data reduced fears of another Fed rate hike in September. But then we got a major warning from the economy. July retail sales unexpectedly fell over 0.6%. At the same time, oil prices are higher for the week as tensions surrounding Iran and the Strait of Hormuz continue to create uncertainty around global energy supplies.
One of the biggest reasons the market has continued to push higher is inflation. The latest CPI and PPI reports gave investors some relief, with producer prices coming in flat for July. Wholesale inflation also showed slowing signs from 4.7% year over year from 5.5% in June. The market is now pricing in roughly a 35% chance of a September hike, down from around the 50% region beforehand. Now we have the biggest wild card hanging over this market right now, oil. Crude prices have been volatile as tensions between the United States and Iran continue. The situation around the Strait of Hormuz remains especially important because shipping traffic has already been heavily disrupted, and any further escalation could put even more pressure on global energy supplies and pushing oil prices even higher.
Dylan, looking at the S&P 500 here, it is great to see that after this giant move out, breaking above these highs that were defended, especially the 750 type of region, we then saw the sellers try and step in, then price yanks up slowly despite the back and forth. This is showing that the buyers are holding their relative gains, such a strong movement up in just those 2 days. Seeing the sellers go 1, 2, and then the buyers push up, sellers again bearish engulfing candle, but the buyers respond well, that isn't enacted, and we push up further. So this is showing that the buyers are holding their gains as well as attempting to continue out further, and the sellers are relatively unsuccessful so far at pressing back down and gaining some of those losses back. And looking at the weekly, we see that predominant green bar. We cannot forget the surge that had enacted all of this, right? Huge range, attempted breakdown, S&P's biggest surge of all time, ranging out again, and boom. So as long as the buyers hold their ground here, definitely looking pretty nice. Do got to keep in mind the geopolitical tensions. However, really strong stuff here by the buyers.
So for the weekly time chart on QQQ, we've seen a very nice reversal. Once again, the market has a very big movement up here and a smaller pullback. Although a couple technical signs around $700, dropping some pressure putting on the market, boom, a very quick recovery. Of course, you can't deny the outright buying pressure from the bulls. This quick recovery has to put QQQ in a bullish spot coming in the next couple of weeks. And on the daily time chart, you do see with a couple lower highs here that did end up collapsing for a very quick flush from about $725, falling all the way down, finding that support, and boom, once again, a very quick bounce. The only telltale sign of a pullback here would be that if we did get toward that all-time high, around that $746 level, and then started to stutter. But as of right now, that explosive gap up, grinding your way up, we're in a good position here. We got to keep an eye on all-time high. But as of right now, the markets do look good for that quick U-shaped recovery. Now looking to trend over that 722 level with a pretty strong close come Thursday, Friday. You can't deny the outright buying pressure from the bulls. This quick recovery has to put QQQ in a bullish spot coming in the next couple of weeks.
Moving to the weekly chart of IWM, you do see the push continue. This is actually one of the more controlled and stronger sectors. As we were looking a couple of weeks ago, we did note that although very indecisive and weak red candles, the sellers were in control for 5 weeks in a row. Not complete control, you see the indecisive candles and weak move down, but we had noted that it would be important that the buyers take back control and get a green week. We get a very explosive green week testing these highs and a continuation closing out this week. So really strong stuff here for the index. IWM, since finding that surge, has been very unstoppable. The sellers not really having any answer, and we're looking to push further.
For the daily time chart at IWM, we did have that selling pressure starting to push us down. Very similar to QQQ, but not as dramatic here. Coming back to that ascending trend line, we have found multiple bounces in the past. And once again, just a very nice breakthrough here with that nice big green bar. From there over the last about 8 days or so, it's just been phenomenal here. So as of right now for IWM, it's a very similar situation. Keep an eye on all-time high around $303. If price does come back loses that level, you should get bearish here from the short term, but as of right now, a very strong close.
This week, energy was one of the strongest sectors as oil prices remained elevated, while industrials also showed some solid strength. On the weaker side, communication services. Overall, we're seeing rotation underneath the surface with investors moving between sectors, even as the S&P 500 continues making record highs. If more sectors continue participating, that could support the broader rally, but continued weakness in certain areas could be an early sign that investors are becoming more cautious at these highs. So for next week's events, the biggest thing I'm watching is the relationship between economic growth and inflation, because right now we're getting mixed signals. Inflation's cooling, the Fed is becoming less likely to raise rates, but retail sales just fell sharply. And the latest jobs data also raised concerns about economic growth. At the same time, oil prices and geopolitical tensions could put inflation pressure back into the economy. We also have major earnings next week from companies like Home Depot, Walmart, Alibaba, and Target. Those reports could give us a better idea of how strong the consumer rally is. So for StockWatch market score, we're giving the market a 6 out of 10. Slightly bullish lean here going into next week. The buyers have proven themselves on the indexes. Although we do have a lot of tensions rising, we will have to see if the buyers can continue with this narrative coming into next week, or if the sellers are going to find a bit of a pullback week coming up. Overall, we're leaning on the bullish side here with all the signs allotted. Looking at this prediction, we're going for Webull to the potential upside. Now, we need a couple things to trigger here. We are enacted at that $8 spot. The exact spot we had topped at was $8.35. Now, if we zoom out here, guys, this was the past lows that were defended. Attempted double bottom. Then we flushed down aggressively. Since then, Webull has been picking up steam. You look on the weekly chart, thing has definitely picked up with these higher lows. Pressing now, very quick retest at these highs in a strong weekly close. We're going to have to look for a potential breakout of $8 and testing above $8.35, where that could cause a nice volatile move outwards for Webull stock. So we do have earnings coming up on the 19th, going to play a crucial role in volatility in the stock. And you're going to want to see price hold well above $8.35. This is the danger zone, however, where you could catch a rejection. So always look for confirmation before leaning into the bullish narrative. But this thing's definitely catching our attention for a volatile move coming up here into the next week.
Yeah, for my setup here, and we're going to go with APLD here. Now, has to be prefaced that there is some very valiant resistance from $33 to $35 here, but price action has showed some great signs. After a very oversold bounce, you see a clean double bottom structure now really tightening up around that psychological $30 level, finding that classic break of resistance, and now retesting it. A nice green candle to end the week. This should give enough strength to test back towards 33 for price target 1 of this scalp, and $35 being price target 2. And I don't hate the idea here for even targeting back towards $40. This one is very primed if you just see some liftoff around that very key level here.
So that'll do it for today, guys. If you enjoyed this video, make sure to hit that subscribe button, hit that like button. Stay tuned for every Sunday upload for our StockWatch predictions and analysis. We appreciate you guys watching all the way to the end of the video. And as always, guys, trade smart. We'll see you all in the next one.